Dragonfly Doji. Now Dragonfly Doji candle is something like this, the one you see on the right. Now Dragonfly Doji is formed when the opening and the closing prices are at the highest point of the day. So if you find both the opening and closing at the highest point of the day, then it could be classified as a Dragonfly Doji. Now why do I say it could be classified? The reason is because the point is to look at the shadow, the low. If it has a longer low, lower shadow, then it means the trend is more bullish. Now what do I mean by that? Now basically in a market, let's presume it's a bearish market. It's falling. So everyone is a seller. Either he's naked short selling or he's simply selling what he has bought earlier in a loss. Now the market is going down, okay? But someone comes in and at the low starts to buy it up and ends the day on the open. So it has a long low, but the opening and closing prices are equal. What does this mean? This means that someone big has started to come up and buy. Now that big person or company or hedge fund is so big that he could buy everyone out on that day, because in a bearish market, everyone is bearish that the price will make a new low. So they all are selling. Even if they see buying coming in, they see it as an opportunity to exit. And if they exit and someone comes up and buys them all, then it means that there is something changing. And if it appears at the market bottom, then it is considered to be a reversal signal. Now, let's discuss Dragonfly Doji on chart so that you can see really how does it look. Dragonfly Doji. Now, what is a Dragonfly Doji? It's this candle. Usually it happens on the bottoms and it means it's a bullish sign. But wherever it happens, it remains a bullish sign. It remains an important sign. It tells you that the rise is just around the corner. Example, why is it a bullish reversal pattern? The reason is, if you look at it closely, it opened at 138.74 and went down, went to 137.05. Now that's a $1.70 fall, approximately 2% fall. But then it suddenly went bullish and came back up and closed at 138.68. Now once this happens, let's say on the bottom, then it means that the buying has started to come in. Now usually on the bottom, what really happens is it remains a red candle and it remains to go down. Even if it makes a green candle, it's like this kind, insignificant. There is no major low and it never went high. But in a Dragonfly, it usually have a large shadow down, large wick down, but it's on the closing, it closes near the open. Example, if you look at this candle, it closed within 6 cents of the open, but the spike or the shadow is too low, which makes it a Dragonfly Doji, which means that the trend is changing. It's a reversal pattern. So it's really a bullish pattern. Whenever you see this, this is bullish. If you look at it right here, from here, 138.68, it went till 142.80, the high. So that's a huge rise. And from here, it started to go up. So that's what a Dragonfly Doji is. Thank you.